This panel discussion will be conducted by a journalist from the UK. She is the editor of the weekend edition of the Financial Times. Please welcome Caroline Daniel.
Good morning, everyone. I'm delighted to be here in Zurich to bring the best of Silicon Valley to what I hope is the best of Switzerland in this room. I'm just going to read through some of the panelists and backgrounds, and with a few special details that you don't know about them from your pamphlets. First of all, I'd like to introduce Kirsty Nathoo, who is CFO of probably the most famous and most successful seed stage accelerator on the planet. It's the largest top angel investor in America. There are some big names like Dropbox and Airbnb. A little known fact about her, she's also been a competitive ballroom dancer. So, Kirsty. Secondly, a second panelist is Bruce GIBNEY. He's probably going to be the best dressed man in the room, and I apologize for anyone who is particularly nattily dressed in the room at the moment. He's probably the only panelist to own his own pair of lederhosen. He's actually, beyond that, a multimillionaire. He invested in PayPal whilst he was at university. He was later involved in the angel investment made in Facebook by Peter Thiel in 2004, an original investment of $500,000. And that's probably one of the most successful investments ever made in a startup ever. And he was once advised to take a job at the bank, and he decided not to work for Peter Thiel when he was at university. So if we can welcome Bruce GIBNEY. And our final panelist is Duncan Logan. Again, he has a very unusual background. He grew up in Scotland. His father was a farmer. He started off farming in Scotland, then became a banker in London, and then thought better of that and studied to do technology in San Francisco. He now runs an amazing tech campus called RocketSpace, and its tenants have included everyone from Uber to Spotify. So I'd like to welcome my final panelist, Duncan Logan. We're not going to have a long introductions, but I wonder if I can just start with Kirsty, and if you can spend 1 or 2 minutes just giving some highlights about the kind of work you've been doing in Silicon Valley.
Yeah, so as Caroline mentioned, I'm part of the fund Y Combinator. We kind of struggle to know how to describe ourselves, because what we do is we invest a very small amount of money into a lot of companies at a very early stage in their life cycle. So this is before we're often the first money in. We're often agreeing to invest before they even have incorporated as a company. And so we invest a small amount of money, and then we work with them very, very closely for about 3 months with the hope to kind of figure out their product, their strategy, to work out how to fundraise. And so then they present to a room full of investors, kind of like this, in the hope of raising more money. And then we continue to work with them after that 3-month period, but that's the very specific point that we can really add value to them.
And one thing which is really interesting is obviously you do recruit talent from overseas, but
Right.
you do insist that they have to come to America. Why is that?
We do.
Why is Silicon Valley the only place to be for you?
So for us, we think that Silicon Valley has this magic, and there's a lot to learn from it. There's a lot to learn from the attitudes of people around risk-taking, around generosity of ideas, of all these startups that started small were now successful, they had so much help at the start. And so the mentality of paying it forward and helping other companies are really useful things to learn. And so whilst we do require these companies to come to us for 3 months whilst we work with them very closely because it needs to be face-to-face, we're more than happy for these companies to go back to Europe, to India, wherever they come from, and take some of that Silicon Valley magic with them and use that to spread that to their hometowns.
And when you talk about risk-taking, can you give me an example of how different that is looked at in the Valley compared with in Europe?
Yeah, so I mean, I think because we invest so early stage, we have a very high tolerance for risk. And so you know, our bar a lot of the time is, oh, this might just work. And I think the mentality over here a lot of the time is, oh no, that'll never work. And so it's two ends of the spectrum.
Yeah.
And you know, we've invested in 1,000 companies now, and of course all 1,000 companies aren't going to be big successes, but as long as we have enough successes in there to cover everything else, then that doesn't matter to us. So we're happy to take those risks, because often it's the outliers, it's the non-obvious companies that are going to become the successes.
I'm just going to stop there for now and introduce Bruce again. Natty suit, what do you think?
Very bucket.
There we go. It's a classy crowd. So, Bruce, wonder if you can just sort of give, again, a minute introduction of some of your sort of highlights of working in Silicon Valley.
Oh, I actually started when I was, as you mentioned, still in school. I had the good fortune of having a roommate who turned out to be the first CFO of PayPal, which was a very convenient coincidence. So I invested in that, and it seemed to work. So I kept doing it for lack of any other real talent or ambition. And then from then on, I've focused on late stage and AI. But I guess my professional role now is as skeptic and liquidator. I have not been terribly optimistic about the state of the startup community for the past year. And I'm sure I can say all sorts of controversial things about that on demand, Caroline.
I'm going to demand them now, in fact.
Oh, you'd like them now?
Yeah, why don't we just sort of start with what's going wrong in Silicon Valley then? Because we all hear all the time in Europe about what's going right in Silicon Valley.
Right. Well, you could have heard the same thing in 2007 about the state of the US housing market. So my beef with a lot of what's going on in Silicon Valley, I put down in a manifesto in 2011, What Happened to the Future. And my argument is that Silicon Valley is not investing in truly difficult things anymore. So if you look at the heyday of Silicon Valley, it invested in truly path-breaking technologies like, you know, Intel, Apple, Genentech. The trend of investments recently has been towards companies that are either clones or have no fundamental barrier to entry, very easy to create, and so on down the line. And it's no coincidence that VC, which was once a counter-cyclical asset class, until the past year or two when the bubble inflated everything, and again, we'll see how markdowns go in the next 12 months, it's no coincidence that the bottom 3/4 of VCs don't make any money. And you know, my contention would be it's that they're no longer investing in the right things, especially companies where there's a sort of genuine technological advantage and very high barriers to entry. Because of course, what you want to extract are rents, right? Because without rents, there are no profits. Without profits, there is no meaningful market cap. Without meaningful market cap, of course, there's no liquidity. And without liquidity, there is no Bentley in the driveway. And that's very depressing.
So that ends the panel. So for a moment of optimism, I'm going to come back to pessimism in a moment. Duncan, I wonder if you can tell us a bit about RocketSpace, where it came from, and how you got involved.
Yeah, so I started RocketSpace 5 years ago in 2011, and the basic thesis around it was starting a company in isolation really sucks. It's really hard, and it's a lonely job. It's a lonely job being an entrepreneur. And it was really, you know, we studied people like Y Combinator and what they were doing at the incubation stage, and saying when these successful companies come out of incubators, where do they go? Is there another high-quality community that they can go to? And that's where RocketSpace really started. So to get into RocketSpace, you have to be at least seed funded. You have to be a technology company. We've had 750 companies through there in the 5 years 15 of them have managed to make it to the mystical unicorn status, Uber being one of the kind of leaders in that pack. And it's as healthy as ever. We get 15 to 20 applications a week. We probably choose what we hope are the best of those, maybe 2 or 3 a month. And yeah, it's creating that ecosystem to help them accelerate in their growth.
So how do you decide between those 10 to 20 startups which come through your office door?
So for us, the selection process is pretty easy. Because everyone's raised money, we look at the quality of the funders. It's by far the easiest criteria. So if we see a good quality investor or a good quality incubation program, certainly YC, 500 startups, a number of others, then those would put people to the top of the list. But fortunately, we don't have to choose on the basis of the company or the projected success of the company. We're doing it off the back of the investors who have done more due diligence than we ever would.
And what's the mood you're seeing amongst your startups? I mean, I know when you run a lot of events, for example, and I looked at some of them. One was benefits of exercising stock options early, which sounded a bit ominous. And another one was how to not run out of funding. So I'd be interested in the kind of mood amongst your startups.
Yeah, I think I've only been in the Valley for, 9 years, but I think it's safe to say there's probably never been as much money in the Valley as there is now. And that creates, it's good in some regards, but it creates a lot of problems in other regards. So there's a lot of money, which means there's a lot of competition, which means it kind of drives down the sort of, it creates a lot of companies rather than a lot of talent focusing on a few big problems. We have small amounts of talent focusing on incremental problems, so that comes back to the point that Bruce is making. The second thing is there's now a very fluid second market, which is really interesting. So a lot of early players in companies no longer have to wait until that M&A event or that IPO event. They can get liquidity by putting their stock into a second market, which has now become very active. And I don't know if that's a good thing either for the true kind of solving the big, tough problems.
And how honest are people in Silicon Valley about how hard it is? Because there's a lot of kind of, talk about how, is there a veneer between super success and massive failure? And you were talking to me off stage about a particular chart which represents startups.
Yeah, I think anyone who tells you that it's easy probably isn't doing it. It is incredibly hard. It is incredibly risky. That the risk factor of getting to that endpoint of success doesn't disappear. And we're going to see that in, I think this year and next year we're going to see a number of would-be unicorns, having to really cut back and trim back.
Have you seen that yet?
I think it's becoming more and more obvious that the public markets are never going to value some of the unicorn status companies the way the private market has valued them. And this creates other problems because funding has become highly sophisticated, where the founders can often get liquidity and can get money off the table. The VCs can put in protection rights and down round protection rights and so forth. And actually, it's the staff, it's the teams who get screwed when these things go bad. And I think we're going to see some pretty interesting cases of that over the next 24 months.
Yeah. Kirsty, I wonder if you can come in on that.
Yeah, I mean, I think there's a few different points there that it is risky, and there are these founders who are working on these companies that can take a very, very long time to work through. And these overnight successes are very rarely overnight successes. One of our most successful companies is Airbnb, and everyone kind of sees that as being, it was suddenly huge. And actually they had years of struggling before they got to that point. And so, these companies that are taking a long time to get to IPO or to get to the large M&A deals, the founders have given so much over that period that taking money off the table, in some respects, does make sense. But as you said, it's the employees that feel the pinch, because they tend to have much smaller percentages of the company. They have their options, so they actually have to pay to exercise those options. And so there are some issues that still need to be worked through and need to be figured out about how to, you know, if people are successful, how does everybody share in that?
So can you talk me through some of the tantrums you have in your office? One of the things I read online was about how you often have to manage different founders and their equity stakes, and that a red flag for you is if founders have very different equity stakes. So perhaps you can just talk me through some of the tough problems you have to manage.
Yeah, I mean, again, we invest at a very early stage, and so often co-founders are still figuring things out, like equity splits. And we often have to have very difficult conversations with them about, you know, we'll have one of them who comes in and says, I had the idea, so I should have 90% of the equity. And this person came in a month after I came in, and so they can have the other 10%. And, you know, we have to then sit down and talk through with these people that you know, if this is going to be a successful company, they have years ahead of them. So what does it matter what happened in the last 3 months? You know, think about this in the next 10 years. And so those kind of conversations are often things that founders don't want to hear. And, you know, at the end of the day, all we can do is provide advice. We don't make anybody do anything. But we have seen so many companies now where we see things like that are actually a precursor for the startups failing, because what tends to happen is both founders are working the same stressful hours, they're putting in their, you know, blood, sweat, and tears into this company, but one has most of the upside, and it breeds resentment. And so the co-founder with the less equity decides it's not worth it, and suddenly the company's in a mess. So, you know, it really, these very beginning conversations are often a driver for actually being the reason why companies don't succeed.
So Bruce, you've seen a lot of very successful startups. At what point did you know, perhaps you can just talk us through personally what it was like to discover Facebook for Peter Thiel?
Oh, well, Peter and Sean discovered Facebook. I just did the legal work on that. I was very junior at the time. I think I'm the only person in Silicon Valley who hasn't actually made any money off of Facebook, although I was there. The truth is, you don't know whether or not a company is going to work until 181 days after the IPO, which is when you get the wire transfer and your lockups expire. Until then, it's all notional. And this gets to a point that I'd like to rant about for a moment, which is the financial unsophistication of Silicon Valley. And I think this is especially a problem. So what you guys are doing is great, and it's traditional sort of early stage VC. But the bulk of the dollars now are being devoted to what are functionally mid-cap companies. And the fact that they're mid-cap companies is revealed by, you know, their presence on the scheduled investments of places like Fidelity and Vanguard. Startups don't belong in mutual fund portfolios for a variety of reasons. But unfortunately, the financial system in Silicon Valley has not evolved in a way where it can knowledgeably support companies that have valuations of $3, $5, $10 billion and have advanced capital structures. And you can see this, for example, even in the media reports of valuations, where you'll see a valuation of $10 billion. But of course, the valuation isn't actually $10 billion, because what happens is someone puts in $100 million of preferred stock. And so what they have is they have a quasi-debt security with an option struck at the $10 billion price. And then you will also see VCs engaging in abusive practices, like failing to provide their startups with debt financing as opposed to equity financing. I'm in Switzerland, so I don't have to explain the difference between the debt and equity premia. And I think basically what you have is a whole bunch of amateurs running the finance side of things for mid to large cap companies, and I think that's extremely distressing. I think that's a very unhelpful dynamic in the field presently.
So there's an opportunity for the Swiss financial sector then?
There's absolutely an opportunity. You should all run down to Silicon Valley and start engaging in the factoring business, for the simple reason that you have a lot of companies with very high quality receivables who are relying on equity to finance their rolling receivables. That's completely insane. You guys have giant balance sheets. get in there right now and take an 8% coupon, which I guarantee you is better than whatever the minus 0.25% the Swiss Central Bank is paying. And get some warrants as well, because no one in Silicon Valley understands the capital structure, with the possible exception of Peter Thiel. He definitely does. And you can get an 8% coupon and you can get some equity upside. So I encourage you all to take the next direct flight on Swiss from Zurich to San Francisco. It's very comfortable. And you can harvest what? The delta would be 8.25%. You won't even be charged for your deposit. How refreshing.
I want to get a bit more optimistic with you, though, Bruce. Can you talk about some of the most exciting investments, obviously one of which is SpaceX, that
Sure.
you've been involved in? So, and also you talk a lot about a founders fund, about wanting to invest in really big scale problems and really hard engineering problems, rather than just incremental ones.
Right, and there are a variety of reasons for that. So the self-serving, halo glowing over the head Silicon Valley reason is that, this is changing the world. Now, of course, you always have to be skeptical when someone says they're going to change the world, because you can change it for the good or for the ill. Usually you don't change it at all. The most fun companies to work with, the most interesting companies to work with are obviously the most ambitious companies. And returning to an earlier point, one of the other first of all, as a financial matter, we know that this works, right? So investing in semiconductors in the 1960s was difficult, right? It was capital intensive, it was labor intensive, it was IP intensive, but the financial rewards were quite significant. The same was true with Genentech, which at the time seemed vastly more ambitious, I would point out, than SpaceX. SpaceX is a wonderful company, but it's been 40 years since we've been to the moon, so it's not like he invented the rocket, right? This is not Werner von Braun. He's an excellent entrepreneur. What Genentech was doing in the 1970s, recombinant DNA technology, had only been invented a few years before. That was incredibly difficult, yet people still made the investment. They made an enormous return. And I think the lesson to be learned from that is that if you have something that's of enormous social benefit, one, people will pay you. In the case of Genentech, like if you cure cancer and you have cancer, then someone will pay you to cure it. There's the financial return, and that financial return derives from the fact that difficult things provide a barrier to entry. And a barrier to entry is fundamentally the source of all rents, which is to say all profits. And at the end of the day, if you're going to make it to day 181 after the IPO, and you're going to obtain liquidity, and I know Switzerland is a cash-focused society in some ways, you are at some point going to have to generate GAAP profits. So whatever your metric of the day is, sort of, eyeballs or page views or, number of finger pricks in, some suburban pharmacy or whatever it is, at the end of the day, the only metric that actually matters is GAAP profits. Anytime you see someone providing you with a metric after year 3 of a company's life that is not based on GAAP revenue or profits, you know that something has gone terribly wrong.
Duncan, what have you found in terms of lessons from some of the startups you've worked with about when things to watch out for, things when they're going horribly wrong?
Oh, geez. We could be here all afternoon talking about what goes wrong. I think it's easier to kind of point to some of the commonalities that you see of what's going right in the successful companies. And certainly for, entrepreneurs or anyone who's thinking about starting a company or getting into the tech scene out there, one of the biggest differentiators I see of the successful companies that come through RocketSpace is the difference in the founder. And with the successful companies, the founder understands that he or she builds the team and the team builds the company. Okay, they don't build the company. And it's a really kind of important differentiation when founders early on, when there's only 3-4 people, focus so much of their time and attention on recruiting those first half dozen people. And it's numerous interviews, it's a long process. And the problem is a lot of companies get started where the company's all about the founder, and they're working in the company and non-stop doing the company, and it really kind of restricts the growth of the company, and they get caught up in that. So with the really successful companies, from very early on, they focus in on culture, focus in on hiring of the team, and that gets going. And I think that's one of the challenges which Zurich or Switzerland's going to have in creating its tech ecosystem, that, you know, if you think about some of these large startups, the Ubers and Spotifys and these sort of companies of the world, the experience you need to operate at that sort of speed is quantifiable. It's enormous. Uber is rumored to be burning through $2 billion a year now. And I know Uber's going to be speaking later, but if you just think of how having a team that could spend $2 billion a year and drive revenue and build a company around that without just burning it is quite an exceptional team. Unfortunately, the Valley has lots of those people kicking around who have done that before at previous companies, who then move on to the next rapid, high-speed startup. So, yeah, I mean, I think it's all about people. You need an entrepreneur with a big, audacious goal, but ultimately, the success of the startups we see is where the teams come together and perform well.
So how worried should some of the people in this room be by some of the Silicon Valley startups? Obviously, we've seen recently what's happening in the car industry, which they had never expected. I was just at DLD in Munich, and someone from BMW said that they were changing their business model, or starting to think about it, from being selling lots of cars to how many miles on the roads their cars were going to be used. A fundamental shift in their industry. So I wonder if you can, each of you, talk a bit about how you're going to kill the Swiss companies.
So I think last night at dinner someone said there's still 30% of Switzerland's involved in the finance market. And you know, I think there was a really great comment. Jamie Dimon, who's obviously in charge of JP Morgan, was going on about, I think it was about foreign exchange transactions and the complexity of foreign exchange and how they have this enormous kind of infrastructure to look after foreign exchange and guarantee foreign exchange, and that's why it costs money. And he's trying to justify it, the whole case. And one of the startup founders kind of commented on the bottom of this article, it's just a ledger entry. And I think it just sums up the whole thing of so much of finance has been built around their own infrastructure that if you come to it with a totally fresh set of eyes, you realize it's just bookkeeping. And so I think, you know, technology or innovation flows like water. It goes to the easiest places first, and we're only just now seeing it really attacking the regulated industries, health, education, and finance. But I think, you know, finance is going to go through a 360-degree change in the next 5 years. And if you're in finance, you're going to be affected by that.
Bruce, I wonder if you can jump in on which people in the room are going to be doomed.
I don't think that any relevant Swiss company is going to be doomed. And I would like to expatiate about the problem of Euromasochism, which is, you know, from the perspective of Silicon Valley, right, you know, people from Silicon Valley fly in. We have this very parochial thing. We're going to come, we're going to tell you how you're going to, you know, build an innovation economy and become more entrepreneurial and so on and so forth. But, you know, driving through the streets of Zurich or Geneva or Lugano, I don't perceive that Switzerland is somehow poor or dysfunctional. You know, indeed, looking through the reports of Swiss companies, and let's exclude Glencore this quarter, it does seem that they actually make quite a bit of money. You know, Switzerland is exceedingly good at what it does, just as Silicon Valley is exceedingly good at what it does. And I think one reasonable question to ask is, you know, to the extent that you want an entrepreneurial economy in Switzerland, and I think it's a fair question to ask in the first instance whether or not you want one, because the one that you have is working quite well. As you go down the, you know, Bahnhofstrasse, it's not like it's just H&M. I mean, there are other nicer boutiques. But to the extent that you want an entrepreneurial economy, the simplest thing to do is what you do with any other scarce import, right? So Switzerland is not an oil producer, and yet it has cars. Not all of them run on electricity. So clearly, the fuel for the cars is being obtained elsewhere. I think you can do the same thing for talent or for innovation. You can either import entrepreneurs. You should steal them from Silicon Valley. The cost of living is approximately equal. The interesting thing, by the way, demographically, is Switzerland and the San Francisco Bay Area are almost exactly comparable in size, in number of great universities, and in GDP per capita on a purchasing power basis. I know PPP will drop a footnote. We can argue about that later. So Switzerland could be Silicon Valley if it wanted to, but it's doing just fine as an Alpine Valley as is. So what I would argue is let us spend the money on the entrepreneurs in Palo Alto, and after year 3, if there's something that's accretive to your business or important, bring your balance sheet and acquire it. I personally would enjoy the liquidity, and I think that you'll enjoy the entrepreneurs. So that's the trade that I'm willing to make right here, and you can see me backstage, and we can have an M&A agreement done at any time. I have a list of companies. And I think that's the path forward. And my final point is, again, it does irritate me, this Euro-masochism, not necessarily in Switzerland, but maybe just across Lake Constance, perhaps. Europe is it's exceedingly functional. It's doing exceedingly well. You know, a lot of the innovation is hidden within big companies, right? But it's not as if Switzerland is not a research economy. It is. It has great pharmaceutical companies. To Fabian's point earlier, Albert Hoffman discovered LSD in Switzerland, so there's win number 1 for you. And even Nestle, the most seemingly boring of companies, has an incredibly innovative R&D department. So there is nothing wrong with Switzerland. And if you choose to have entrepreneurs of the Silicon Valley type, just buy them a plane ticket, and they'll be here, because this is a great place to live and work.
There we go. You're such a crowd pleaser. How many people in this room, though, fear that their company will be disrupted? I wonder if you could put your hands up.
Oh, wow.
So that kind of plays to Bruce's point. There were about 4 or 5 hands maximum. How many of you, if you had kids, would be proud if they went to a startup which failed? Okay, it's about slightly higher. Just a few other random quick questions. How many of you are on Twitter? That's really impressive, actually. I was told that there was a relatively low social media in Switzerland, so obviously things are rising. One question I have, which is about startups. Obviously, I'm based in London, so we're quite happy about our startup scene. We come top of lots of the startup lists in Europe. And in fact, there was a chart last year for European digital cities. It had 35 top cities. London was at the top for startups. And in the list was Amsterdam, Stockholm, even Bucharest, Zagreb, and Sofia. And no city from Switzerland was on that list. So I think it would be a great opportunity to talk to someone from Switzerland about why that might be the case. And thankfully, I think we have Rudy Noser in the room ready to come up. That's why the empty chair is there, in case you've been wondering. So, Rudy.
Or not.
Maybe he was so pleased about the Swiss being so successful, we didn't need him to defend the Swiss. You've been channeling your inner Rudy Noser.
I can try, but I only have French and German and Spanish.
Hi, nice to meet you.
So, really, listening to some of the panelists on the stage today, do you think Switzerland has a problem?
No. I think Switzerland has not really a problem in the moment. If you look to the unemployment rate, for example, we are around 3%. The young people get jobs. We have a lot of innovation in existing companies. In the moment, I think we have to say we have not really a problem, because you have lots of chances when you come out of university, also in the existing companies. Existing companies ask for a lot of people already. So everyone who has a university degree gets a job.
So does it matter that you don't sort of rank in any of the startup lists? You're not talked about as a sort of innovation center for startups. You haven't got a famous unicorn coming out of Switzerland.
And now you put out now the question, is there enough for the future? That's another question, but we have always to be aware the future is very difficult to say what is the right thing. But Definitely something that we should maybe have more ideas here in Switzerland where we can build on it than we have today. That's definitely something that we should have. And definitely we should stop to lose ideas to other parts, for example, to the Silicon Valley. As if one is successful, he should be successful here in Zurich and not to leave the country to be successful. And there we have a few of problems that we have to solve. You will see when you would invest here in Switzerland in companies, you will have some tax issues that we have to change. That's important. You will have maybe some labor issues that we have also to change. I need your support to change this. Vote the right thing in February. Also, there are a few issues, but honestly spoken, I also love them in Silicon Valley. I have also issues. It's not easy to get skilled people in Silicon Valley too. They are expensive. They're much more expensive than here, by the way. A lot of people mean that it's vice versa, but skilled people on the same level that you have here in Silicon Valley, you pay more, for example. So it's a good place here also to start. We need a better community in seed money and in venture capital. And I'm happy that the World Web Forum starts now a seed money initiative. That's something that is important. That's something that we have to change. And we have to attract more ideas from abroad. That's maybe the points, the most important
Okay,
point.
so that's the optimistic point of view. But Duncan, I wonder if I can bring you in. What would make you actually think you would want to do a startup sort of tech opportunity in Switzerland? Does it look attractive to you?
I think to be successful in any technology cluster, you need all the components of the cluster to help. It's no point just having one aspect or other. I think it's very dangerous for any country or city to sit back and be complacent about the technology revolution that's happening around the world and saying we're not going to be aggressively trying to become a part of that. I think ultimately a technology cluster gets a kind of market thickness. It's like a dating website, and once the big ones are formed around Europe, it's going to be very hard to stop your talent going to those clusters and actually drive and build your own cluster. So I think there is an element of urgency for cities and countries that want to get into this technology revolution, information age, to really focus and build their cluster now. For me, when we think of RocketSpace, we try and place it as the nucleus of a cluster. So when we come to a new city, we look to how to coordinate capital with angels and VCs, how to engage with the universities, incredibly important source of talent, how to engage with corporates. 50% of RocketSpace's business is actually corporations who are coming to the Valley to work with or work like startups. So there's all these different components, and local government is critically important. So there's all these components.
Do you have any Swiss companies who are working with you?
Do we have any Swiss companies? Probably. I can't think of any off the top of my head, but I'm sure we do.
And Kirsty, I wonder if you can just pick up this point about, do you think that there's anything that would persuade you, looking at the sort of creating sort of a startup culture, that Switzerland is a great place to come and do it?
So I think it's one of the points that Bruce mentioned, that startups need money. They need the capital, the early stage money, and Europe's great at Series A. There's a lot of VCs who will put a lot of money at that stage. But actually, there's a whole process before that. And so, one of the things that needs to happen is that there's this kind of willingness to take a risk on these companies and, invest in your roommate from university or whatever, just because they're your roommate. Because often that money is required, because that's the money that gets the company to the point of having a product market fit or figuring out what the next step is, to then go and get more capital to figure that more out. And so I think for me, the biggest thing that needs to change in Switzerland and in Europe as a whole is that very first level of money that needs to come in. And again, that comes back to the willingness to take a risk. Because actually at that level of investing, 99 times out of 100, probably more, you're waving that money goodbye. You're never going to see it again. But that one time where it works, it could be the next Facebook.
Rudy, I wonder if you can come in. Do you think the Swiss are too culturally averse and will never be able to create a startup culture?
So I listen very carefully to you, to the ecosystem, and now to you, to the seed money ideas. And actually, I would say first, we have a perfect ecosystem. Also, we have medtech, we have biotech, we have robotics, we have lots of things here. By the way, you all drink Nespresso. That's also part of ecosystem. And we have also a good seed money culture. So if you want the financing between 0 and 100,000, between 0 and 2 million, you get the money. You do not really get the money after the 2 million. What is missing, when I speak with a lot of the community, what is really missing, and that's maybe the most important thing, if you have everything, and then you look what is missing, it's not LSD, I think. Missing is the culture to speak out the big ideas. That is missing. We start small and we want to work it first small. Some of you mentioned Uber. That would be impossible. The Uber idea in Switzerland, that's not in our culture. We would first to work it in Zurich, and when it's work in Zurich perfect, then we are very afraid to go to Schlieren. Schlieren is a suburb of Zurich. That's the problem of Switzerland. And I call you all, make your ideas bigger. You have great ideas, make it big. Then the logic that you put on the table then starts to work. Because this logic is not working, because we are very, very slow in this development of these ideas. That's the reason now, because we are very good in areas where it has to work. Healthcare, for example. I think we are market leader in healthcare. Because it has to work, you have to prove it, you have to do it 20 times to be sure, then we are great. But to put a web page like Uber on the place, honestly spoken, it's not a sophisticated solution in the end of the day. It's technical state of the art. It's great what they do. The business idea is great, but not really the technical solution. You can do this in a lot of other places also. But if you do not have the currency, the fear to have a big idea and put it on the table, you will never get the 2 billion annual investment in this idea. And that's the problem of Switzerland. So I call you all up, make your ideas bigger, please.
Okay, Bruce, given that you're the man of big ideas, and Founders is about investing in some of the biggest ideas, space rockets and things which aren't going to happen immediately, is there any advice you can give the Swiss about how to think bigger?
Well, sure. First, I would just, as a general proposition, do whatever Peter Thiel does. It's just like following Bill Gross in the 80s and 90s in the bond market. It'll work out. It'll be fine. He's very good. Not to get into some sort of Hegelian synthesis, but so what we've described so far is a cultural problem, right? So Switzerland is, in a sense, a victim of its own success. It has many good options for its engineering graduates. It's also a highly functional place. Both you and I are very pro-Switzerland. But also a startup culture, right, which requires a certain critical mass, to your point, and to your point, where the failure rate's very high, and they're probably going to be much higher for an emerging startup community. And to the extent that we think a startup community is good for Switzerland, and again, I would go to first principles and ask whether or not you need one, because you could go and acquire these companies later. What you're describing is a classic public good, and that makes it your problem. And the way in which it's your problem is public goods should be funded by the public. And to the extent that the government needs to provide an incubator, that's perfectly appropriate. The United States has done so for quite some time. Even the Central Intelligence Agency has an incubator, InQtel, which thoughtfully invested in one of our companies. The other thing that I think is important is the university-private partnership. And Silicon Valley is essentially the creation of a man named Frederick Terman, who is a professor of engineering at Stanford. The ugliest building on the Stanford campus is unfortunately named after him, so you can probably do better on that front. But he encouraged his young graduate students to go out and actually found a company based on the principles that they had been studying with him. And those two, of course, were Hewlett and Packard, and that's what got the whole system going. And it began this sort of conveyor belt between the Stanford Engineering Department and Sand Hill Road. So Stanford provided low-cost land. It provided access to equipment, at night on the sly. It provided encouragement and so on down the line. And there's a reason why, by the way, the startup community has never really gotten that far from the Stanford Engineering Quad. And it's all because of one visionary professor, Frederick Terman, who decided that the universities had a role in the private sector. Before, it was very sort of, aristocratic, hands-off. We can't dirty ourselves with filthy lucre, but Terman changed that. And to the extent that the several great technical universities in Switzerland can adopt a Terman model, then I think there should be no problem. Because again, you do not lack for capital or talent or quality of life. And you have 99.9% of everything. And in some things, you have like 110%.
Kirsty, I just want to bring you in as well on the sort of what you see in the differences between American startups and founders and their aspirations compared with the European ones. I think you've spoken about the Americans are much more willing to say expansive, visionary things, whereas the Europeans are much more circumspect.
Oh yeah, I mean, there's definitely the American predilection for exaggeration, and so there's certainly when I moved to America, I had to learn this, that everyone was world experts at everything, and then I figured out that actually they read a book about it, and so there is that culture difference there, and underlying the people aren't any different. The founders are equally as determined, they're equally as intelligent, they're equally as driven about doing this, but the way they describe themselves and the way that they talk about it is just so very different. Everything. Y Combinator gets this about when we have our companies who are launching publicly. Everybody says, oh, they're talking about taking over the world, or they're going to, disrupt the hotel industry. And at the time, it's a small company. Airbnb, they started off in 2008, and their plan was airbeds in people's spare rooms for when people go to conferences. But yet, they're disrupting, the hotel industry now is terrified of them. They have more rooms available than the largest hotel chain in the world. They have a higher valuation than the highest valued hotel chain in the world. And so, that just total drive and the vision and being able to explain it is different.
I'd like to open it up for a few minutes of questions from the room and then come back to the panel as well. So if you have any questions, can you obviously raise your hand or make yourself known? A lack of questions at all from the room. There must be one person with one question. There is. Man in the front. I think is there a microphone somewhere? Or you can just shout. Okay, the question was, what kind of technology or businesses are you looking for investments? Is that correct? I think, are you asking that of Bruce?
I think so.
Yes. So the application of machine learning and artificial intelligence to financial products, which, by the way, would be wonderful for Switzerland. The nice thing, so AI is at a cusp. One of our companies, former companies, which was acquired by Google, DeepMind, earlier today announced that it beat Europe's expert at Go, which is a computationally more difficult problem than chess is. One of the problems with AI is the input problem, so it's very difficult to solve. You only want to solve one problem at a time because human beings are limited. And if you're trying to recreate the human brain and getting a robot to move across the room, you have to solve the problem of locomotion, vision inputs, this, that, and the other. It's It's a whole series of very complicated problems to solve. The great thing about finance is all the data is there, there's a lot of it, and it's all digital. So the input problem is already solved, and you can train the data sets against it. Now this is the one area where there is potential for significant disruption to Swiss industry. But again, you have the balance sheet to simply acquire any problematic company and make it accretive to your own. I think that's particularly promising. I think most great companies tend to create their own sector. So the reusable RocketSpace sector didn't exist before Elon invented it. Social networks did exist before Facebook, but only barely and not in a functional way. Who even knows what category you put Twitter or Grindr or Match into? So it's difficult to predict what the next category is going to be. As an investor, you just have to keep an open mind. And I think one of the other things that one has to be open about is when a current cycle is coming to an end. And so I think one of the larger questions in the startup community is not a question of investment, but divestment. I know people are going to be angry when I get back home.
Not if you found some Swiss buyers, though, for your startups.
I know. Come meet me after. Redeem me.
Yeah, that's why he's actually on a sales mission over in Switzerland. That's why he's here, clearly, to dump some of his startups. Duncan, I wonder if you can just talk a bit about some of the trends you're seeing in tech amongst your startups, because both you and Kirsty have a really interesting early insight into the kind of big ideas that are coming forward.
Yeah, so we typically, we're at the accelerator stage, so it's after YC, but we do see trends. I think some of them you kind of are excited about, some of them not so much. So when Groupon was big, we saw daily deals for everything. Daily deals for pets, daily deals, that whole Me Too sort of category. Ones that I kind of am passionate about or like at the moment, I think we've been talking about this over the last couple of hours. I think virtual reality, augmented reality are going to see their boom over the next 6 to 24 months. I love all the different funding sort of startups between peer-to-peer lending, crowdfunding, those sort of areas. I think it's really beginning to make an impact into that, albeit it's minute on the bigger picture of finance. It's really opening up a lot of doors in the kind of early stage. And then just more use of data. I mean, this is where I think seeing the financial world, seeing these people building enormous computer power to crunch through data, which gives you a different perspective on a company. There's 1 or 2 companies doing that already in San Francisco, where instead of looking at products or sales, they're looking at the quality of the hiring, who's hiring, who's losing staff, all this public information. It's a kind of camera sitting at the focused on the gate of the factory to get an alternative view of the company's performance. That sort of stuff is really coming through, and they're proving that they can beat the markets. So I think that's really exciting stuff as well.
Okay, we're nearly running out of time, but I'd love to ask each of you to think about what invention would you love to be around in the future long enough to see come about? So, Bruce, I'm going to ask you first.
Well, I'll give you the standard Silicon Valley answer, which is the singularity, because I would like the optionality to see a million other things, but that's kind of like asking the genie who gives you 3 wishes for a million more wishes. But that's the one that I'd like to see the most.
And why is that?
Well, it would be the first non-human intelligence that we've seen, so I think that would be interesting. Let's hope it's better than most of the human intelligences that we see, because that would be dull.
And when do you think that's going to happen? When's the singularity going to change our lives?
I think it will happen sort of all at once, and we won't really know it until it's maybe too late. But, predicting the future is a very difficult business, as the mortgage desks at the big American banks know from 7 years ago. But I don't know, sometime between 2030 and 2100. So if I take a jog this afternoon, maybe I'll make it. Okay,
Duncan, do you have any fantasy thing?
I'm kind of, I think innovation has kind of swept through the digital phase. It's now going into the physical, and then the next step's obviously the biological. And the biological stuff is really interesting to me, because I think when we look at things which beat Moore's law, I think you can look into biology and see that we're going to cure a lot of really major problems in a relatively short time period. They're saying that cancer could be within a decade, other things like that. And I think that's super exciting. I think it's going to create all sorts of additional problems. But I think if you have enough money, you could probably almost live forever, because the money that you could use to buy new organs or whatever would get you far enough down the line to where technology would advance. So I'm kind of super interested around the medical stuff.
Now, I have a good analogy about AI and processing power. And if air travel had improved at the same rate as computer processing power over the last 30 years, you could travel from London to Australia in 8 seconds. So there's a fact for the airline industry. So Kirsty, is there some fantasy version of the future you'd like to be around to see?
I think for me it's something around transport. The way that we're living is changing, and in the 50s and 60s everybody moves out of cities and into the suburbs, and now it's much more the case where people are moving back into the cities and staying there for much longer, and that's creating a lot of problems around the infrastructure of cities. And so the first step is the self-driving cars and where that goes. But the sort of 3, 4, 5 steps beyond that, and are we going to live in a world where like the Jetsons cartoon, where everybody's driving along in the air in their little self-driving bubbles that can take them to London to Australia in some short time. I think there's a lot of things that we can do there to change our travel from being on a plane to being on a 3D.
Yeah. Rudy, are you waiting for your own personal drone to take you from here to Geneva?
I think around 3 hours. So I think for Switzerland, the next big thing which may be important is the fintech, the financial areas, where I would say, by the way, if you want to invest, there are 100, 120 companies in Zurich where you can invest in it. I'm not sure which one will be the best, but you will find it.
I'll do it this afternoon.
That's a possibility here. But in general, I would say in the future, it would be very important for us to put the emotion in the products. What I mean by this is, I think people are annoying to eat food where they don't know where it's coming from and all this. And this individual thing, digitalization gives you a lot of new individual information where we have our industrialization lost or put away. We make things same because it's easy to handle it, and now we can make things again different because it's also easy to handle if they're different. And we have a strong food sector here in Switzerland. By the way, we are the biggest coffee exporter of the world. For example, we have good retail experience here. We have a good market, good content for healthy food and all this. So that would be definitely the market for invent new products in this area. I think to make a startup in this area, I think Switzerland would be the best market, better than maybe the United States, because you have to start here in a very skilled and good market, and there is also a chance to invest for them. And then a lot of automatization and robotization and drone and all this application that will come. I think there, in the short term, there I would put the money in. Brain, I'm skeptical. If you speak with really brain researcher, maybe your assumption of 100 years is optimistic. We will see. Because you have to do it by no power, or we need no power for all this.
Well, okay, that's one area where we can disagree, but I will. But maybe the technology, maybe the eventuality I'd like to live to see is where Silicon Valley believes in Europe and Europe believes in Silicon Valley, because the sort of this weird mutual sort of misunderstanding is completely unhelpful. Europe is a great place and has been a leader since 1500, and Silicon Valley has been doing its shtick since 1950. So there's two-way learning to be had.
I think that's a beautiful point to wrap up on, I'm afraid. I'd like to thank all the panelists for talking so openly about the future. Duncan, Bruce, Rudy, and Kirsty. Thank you very much.
Thank you.
Thank you very much, Caroline. We will see each other again later. Thanks to all the participants. Mr. Noza, before we now have a brief interview session here on stage, if you want to speak to our speakers who are on stage here later on, please feel free to meet them at the media lounge over there. So after every talk, you have the chance then to meet the speaker in person. Mr. Noza, we heard some interesting insights here on how the Silicon Valley works. We heard some of your insights on Zurich and the area here. And as Bruce already said, a lot of things are working out here quite well. So for now, in the present, everything is fine. But you were also mentioning the future and that you have to make yourself ready for the future. And one of the initiatives here in Zurich is Digital Zurich 2025. Could you explain us a bit about this initiative and their purpose?
As a first, in one sentence, back to the discussion, I think it's very important that we know our strengths when we go to the Silicon Valley, not only our faults.
I think
but
so too.
Of course, we have things that we have to do better in the future, and one of these is this philosophy that ideas where are good, they get created here in Switzerland. And so Digital Zurich wants to help, to change, because the digital revolution will be a very important thing here for Zurich, for the whole Switzerland. Digital Zurich wants to stimulate this digital revolution, bring the CEOs on the table, give them knowledge to understand what is going on here in Zurich, in Geneva, what is important for us, that we can be successful in the finance industry, for example, 10 or 20 years in the future, that we maybe have to believe in algorithms, not only in people, and that we have to change more knowledge, bring in algorithm, and bring that to the market. And that's what Digital Zurich is the main message.
Can you give us some concrete examples on how you want to achieve that goal?
As a first, we are proud to sponsor also here this and support ideas who are in this forum. The World Web Forum is a very important part of this, because there are not lots of congress like this here, so we support this. And that also says the gene of Digital Zurich. We want the good thing to make better. We don't want to make new good thing and compete to existing. There are a lot of good ideas here in Zurich. We want them to make bigger. That's the goal, and not make it better and like we say, the Swiss way to do in his garden, to do it better and not look to the other garden. Also, we want to make the ideas who are already here existing better. That's the first thing. And then we had to analyze. I told you also in the speech, I think we have two less big ideas here, and we are two, maybe if we have one, then we don't tell it. So we start with an accelerator program like Combinator in these ideas here in June. The idea is with 50 ideas to start. If you have good ideas, bring it to us. And then we will do this 3 months program and look, can we bring these ideas to a startup? And we want to do it internationally. Our goal is to have 60–70% people from abroad who come here, so that we have an idea inflow in the ecosystem. And please feel free, if you see a great idea in our program, come and pick it. It's for you, it's for Zurich.
So, and this whole initiative then goes on for the next 10 years? Or what are the plans? What are the next steps then?
Maybe we have also learned from Silicon Valley that we don't have to do something for 10 years. We do now a version 1 this year, and then we do the version 2 next year, and then we plan maybe for version 3, but not more in the moment. Because things move so fast, we should stop with 10-year thinking. But we want to stay here and want to do the right thing every year. The whole association is committed to this and to support, so that this change will be successful.
You are an entrepreneur yourself, and you founded a company, I guess, in 1988. So when you were a startup to that time, what was the best advice that someone gave you, and what were some good resources that were helpful for you to successfully launch?
Now that's a very difficult question, because as we start 84, but you have to remember 84, the word seed money, no one knows. The word KMU, who everyone's mentioned now, comes up in the 90s, so we don't know that we are a KMU. So we just did it. We never asked somebody, and we just did it. Maybe that's also the strength here of Switzerland. A lot of people just do it. The problem with this is maybe we do it not big enough. Mm-hmm. And I never got advice to go faster. I always got advice in friends and family to be careful. They want not that I fail or my brother and I fail. I think that's the biggest that I got from the community. They want that we are successful step by step. If we would have big ideas, I think they would not support us.
Thank you very much, Mr. Noser. Thank you very much for explaining on Digital Zurich 2025. If you have any questions to Mr. Noser, then please ask him also afterwards at the Media Lounge. Thank you so much, and hope to see you soon.
Thank you. Good to be here. Thank you.